For the longest time, my trading looked like this. I would wake up, grab my phone, and watch other traders trade. Another winning screenshot, another guy posting a video where he says how he made like a 10K a day with trading, etc. I will watch the YouTube videos, save the setups that I will never actually use in my real life. So basically, I was watching more how other people trade than I was actually trading myself. I would say to myself, like, it was just a research, I was learning, I was getting better trader. But in reality, how did it actually impacted me? Because I was not profitable. So this is interesting, guys. And they say that you are what you consume. Back that time, I was consuming a lot of trading information, but it didn't happen. It didn't help me until I actually started implementing all of that information in the real chart. That's where everything shifted. So in this video, I want to talk about what I actually did, what strategies helped me to become a profitable trader, and I will walk you through all of that information, through all of that journey. Probably this will change your life too. So let's get started. Here's the thing, I was not chasing anything crazy. All I wanted was to become a profitable trader who wins 1 to 2 trades a day, makes an extra couple of $100 a week from trading to support his life. That was it. That was the whole dream. Not a Lambo, not a private jet, not quitting everything to make 10 grand a day like those guys on my screen. Just a simple, quiet edge, 1 or 2 clean trades, a few $100 a week, and a little more freedom in my life. If you're being honest with yourself, I think that's what most of you actually want too. Not the fantasy, just the consistency. But wanting that simple thing and actually getting it, those turned it out to be two completely different worlds. Because instead of getting there, I was stuck in a cycle of learning and consuming an infinite amount of knowledge from other traders. And here's the part that's hard to admit. Every time I took a trade and lost, I never looked at the solution inside myself. I only looked for external validation, watching more videos, buying more courses, more content, more gurus, more this indicator is gonna change my life. A loss would hit, and instead of sitting with my own trade and asking, what did I do wrong here? I would go straight back to the YouTube. I tell myself the answer must be out there in one more video, one more strategy, one more course I hadn't bought yet. So that the market was not the problem in my head, my lack of information was. So I consumed more and more and nothing changed. I was treating the market like a test I could pass by studying harder, when the trading was never that kind of a test. And that cycle did something to me. I was deeply frustrated and insecure about the decisions I made. Every trade came with a little voice. Are you sure? And the other guy, the opposite one, said, maybe you don't actually know what you're doing. I felt like a fraud. I never took myself and my own experience an authoritative source of knowledge. Somebody in the internet always knew better than me in my own head. And so no matter how much experience I got, and I felt like an imposter. Years in, thousands of trades in, and I still felt like a fraud who was one bad week away from being exposed. Think about how backwards that is. I had the screen time, I had the losses I learned from, I had the real experience, and I trusted a stranger with a ring light over myself every single time. And here's the frustrating part. Nothing I learned was working for me fully. I felt like I was just about to become a profitable trader and then I'd fail right back. So close I could almost taste it, then straight back to square one. Over and over. And that moment, that's when it's finally clicked for me. I realized the methods were not the problem. The strategies I'd learned were not broken. Any method you learn online needs to be tuned exactly right for your own needs to work perfectly. Think about it like it's like a jacket. None of the jackets is gonna fit you right away off the rack. It needs to be tailored to your own specific shape to have the best form. A strategy is the exact same thing. So you can buy the best jacket in the world and the exact one that looks perfect on the guy in the video, and you will still hang on you wrong until it's tailored to you. I kept buying new jackets thinking the last one was defective, when really I just never tailored a single one of them to fit me. I didn't figure that out on my own. I needed someone to point it out. One day after failing yet another funded challenge, I was having a conversation with one of my trading buddies, who was kind of like a mentor to me as well. And I will never forget this moment. I was venting to him, doing my usual thing. Maybe my strategy is broken, maybe I need to learn X, maybe it's my entries, and he just cut me off. He told me to open my trading account and he started reviewing my trades together with me. Not talking theory, not sending another video to me, just show me your actual trades. Let's look at them. And I remember feeling almost embarrassed because in years of consuming, of buying courses, of watching gurus, none of them, not one time, had I actually sat down and honestly reviewed my own trades with someone who knew what he were looking at. I would look everywhere except the one place the answers were hiding. And what we found wasn't what I expected. The concrete problem I had was not that my strategy was unprofitable. The strategy was fine. The problem was that my eyes had been blinded by all of the videos and gurus I watched online. The ones making huge profits in a day, huge profits per trade, all of those screenshots, all of those 10K days. So without even realizing it, I started subconsciously chasing the big wins too. Every trade in the back of my mind, I wanted it to be that one trade, the monster winner I could screenshot. I was following my strategy to get in, and then I would throw it out of the window on the way out, holding for a fantasy number because that's what I trained my brain to want by watching those videos all day. I had become greedy, not because I'm a greedy person, but because I'd spent years marinating in other people's highlight reels, and it rewired what I thought a good trade was supposed to look like. So then we actually looked at the numbers, and this is a part that genuinely changed my life. We saw that the majority of my trades went 20, 30 pips into profit before reversing back and hitting my stop loss. Let that think in, because it's wrecked me. At that time, when I pulled up my history, about 40% of my losses went straight to the stop loss. No real rejection, I just was wrong on those trades. Fine, that happens. But the other 60% of my losing trades, can you imagine that? They were in a good profit first, a real profit. And I gave every single one of it back. And then some, because I was holding out for the big number. If I had just closed those on time, I would have been a mega profitable trader already. The winning trades were there. I was turning them into losses with my own hands. So I changed one thing. I changed the way I took my profits, and I became profitable almost overnight. And here's the actual mechanical fix. So this is not just a theory, because I know you want the how as well. The reason I was greedy is I had no rule for taking the profits. I set targets based on how I felt. Just give me a little more. That's not a system, that's a wish. So I built a mechanical rule for it, and it's stupidly simple. So you use the average true range, the ATR indicator. It just tells you how many pips the price moves on average, and your take profit is half of that number. That's it. You take the ATR on your time frame based on the trader type you are. Day traders rates it on the daily time frame. So if the ATR on the daily time frame is 70 pips, your take profit should be at maximum 35 pips. No fillings, no just a little more. A number the market gives you, cut that in half. The moment I stopped asking the market for a fantasy and started taking the profit the statistics said was actually there, the whole game flipped. Now, I would be lying to you if I said that was the end of it. Raw credits, profitable forever. Because of course, this process was not that easy. The old habits, the FOMO, the greed, they took over me for a long time after that as well. Knowing the rule and following the rule are two different animals. I'd have a great week running the ATR take profit, disciplined, clean. And then I'd see one of those 10K day videos. I'd watch a trade run past my target, and that old voice would come back. You're leaving money on the table. Just this one. Hold it. And I'd break my own rules and give it all back. Again, the rewiring took months. The rule changed my results overnight. Unlearning the identity the consuming had built in me, that took a lot longer. But every time I followed the rule instead of just the feeling, the grip loosened a little bit. And slowly, by overcoming those, it added up to something I genuinely didn't think was possible for me. I became a six-figure funded trader, I reinvested my trading profits, and I finally left my job as an auditor. The couple of $100 a week dream I told you about at the start, it quietly grew past that. Not because I chased bigger, but because I stopped chasing bigger. That's the irony that still gets me. The moment I let go of one big win I'd be trained to want, the actual money showed up. But if you take one thing from all of this, from everything I just told you, let it be this. Most of the time, the answer to your problems are already right inside you. Not in the next video, not in the next course, not in the next guru setup, inside your own account, your own trades, your own experience. Now, I want to be honest and balanced about this because it's not the whole story. You do first need a mentor, someone to learn from the proven past how to trade the markets. And I'm not going to pretend I bootstrapped this alone in a cave. I needed my body to sit down with me and show me what I could have done that I couldn't see in my trades. That part matters. You need the map. But after that, to actually become a profitable trader, you have to look right inside you. The map gets you into the right country. Tailoring it to you, reviewing your own trades, trusting your own experience, that's what gets you home. I spent years as a spectator of everyone else's trading because I was too insecure to look at my own. The day I finally did, everything changed. So stop watching, start reviewing. The trader you're looking for on your screen has been sitting in your own account the whole time. Now, I could have ended this video right there on the mindset, look inside yourself, and a lot of trading videos would. But I don't want you to leave with just a feeling, because a feeling is not a plan. When my mentor sat down with me, he didn't just tell me to believe in myself. He gave me something concrete to actually run. So let me do the same for you. Let me show you the exact mechanical strategy I trade now, the one that finally let me stop watching and start trading. It's called the ARB. And once you see it, you will understand why I stopped trading the way everyone online told me to. So here's where it starts. Stop following the orb, the opening range breakout. There's a better alternative that fixes every problem it has. And look, I'm not here to trash the orb. The opening range breakout is one of the most hyped strategies right now. And for a good reason. It works. The concept is genuinely solid. But it has one more major drawback that most traders never talk about. And it's the exact kind of thing I would have completely missed back when I was just consuming. Because nobody making these hype videos ever mentions it. Here's the thing. The core concept behind the orb is solid. It's a rule-based, mechanical, and clean. That's why I liked it in the first place. But the way most traders execute it comes with the two hidden costs that quietly make it unsustainable as a long-term approach. Not on the day one. Day one is exciting, but over weeks and months as these two costs slowly grind you down. And once you understand what those costs are, the better alternative becomes immediately obvious. So let me show you the biggest one. Here's the first hidden cost, and it's a big one because the orb is a scalping strategy. You're operating on the 1-minute chart during one of the most volatile periods of the entire trading day. Think about it, what actually means for your day. Hours of intense screen time, constant decision making under pressure, an enormous amount of mental energy all spent on a window that lasts barely 30 minutes. And if you watched my whole story up to this point, you already know why this one hit me personally. That's the exact kind of thing that burns out a trader. You sit there, glued on a 1-minute chart, heart pounding, making split-second calls on the most chaotic moment of the day, and your mental battery is empty before the edge even gets a chance to play out. Most traders burn out before their edge even has a chance to work. There has to be a better way, and there is. So here's the fix. Here's where to start. The ARB takes the exact same concept, the core principles as the ORB, but applies them on the 15-minute time frame, using the first 4 hours of the Tokyo session as a reference range. Same idea, same DNA, same rule-based logic, same mechanical breakout concept, nothing about why it works changes. But here's what changes for you. Instead of scalping on the 15-minute candle on the 1-minute chart, you're day trading on the 4-hour range on the 15-minute chart. And that one shift gives you far less screen time, far less mental fatigue, and far more clarity over every single setup. Same edge, none of the burnout. That's the whole trade you're making. And it's a good one. Now, let me show you why this works so well, because the timing behind it is beautiful. Here's the logic. Once you see it, you can't unsee it. The Asian session is the quietest period of the entire trading day. During those 4 hours, price consolidates, it ranges, it builds up liquidity. With almost no institutional participation, nobody big is playing right now. The market's basically asleep, coiling up. The London opens, everything changes. The institutional volume floods in, the volatility explodes, and price breaks out of that range. It spent all night quietly building up. So think about that, what that means. By marking up the first 4 hours of the Tokyo, you're positioning yourself perfectly to catch that explosive move the exact moment it begins. You did your work while the market slept. Now you just wait for the wave instead of chasing every ripple on a 1-minute chart. So here's exactly how you set it up. And it's simple. Every morning before the London session opens, use the sessions indicator to identify the first 4 hours of the Tokyo session. I will show you the real life examples just a little bit later in this video with all of the settings. Draw the high and the low of the price action inside that window. That's it. That range is your reference point for your entire trading day. And now everything becomes clear. Everything that happens inside of that range is just a consolidation. Noise. Ignore it. Everything that breaks out of that range during the London and New York is your potential trade. No guessing. You're defining the whole day with 2 lines. Now here's how you actually take the trade. Once price breaks out of the Asian range during the London and New York, you wait for the retest. You don't chase the breakout candle. You let it come back to you. Then you draw the Fibonacci tool on the breakout leg and wait for the price to pull back into the golden zone. Here's the exact entry. Enter at the 60% level, place your stop loss just below 80% level, and target minimum of 5R. One clean setup, great risk to reward, define it before you ever click the button. One setup per session, execute it cleanly, and close the chart. And the last part, close the charts. That's the whole point. That's everything I wished I'd had back when I was just a spectator. One clean trade based on a rule, and then you walk away and live your life. No staring at charts, no chasing, no burning out on a 1-minute time frame. This is what trading looks like when you finally stop watching everyone else and start running your own plan. Now guys, let me break down a couple of real life examples for you so you really learn this setup in details.
Okay folks, this is a real life examples of this strategy. First of all, that you have to understand, we are on a 15-minute time frame on Euro USD. These vertical lines identify the breaks of the day. Basically, this is when the new Tokyo session opens. So basically, you open the charts right before the London and New York sessions. Like sometimes it happens during the London session, sometimes it happens during the New York session. For me, it is convenient to trade the both sessions. So I open my charts right before the London session, and we have to draw the high and the low of the price action during the first 4 hours of the Tokyo session. For that, I use the Fib levels. By the way, you can copy my settings over here. Here are the settings. You see, it's just going to, and I've added this text over here. But in any way, as you can see over here, the price is breaking to the downside and retesting our Asian range. This is where we just need to get our Fib levels, draw it from the high to the low of the breakout, and let's apply it. And we are going to enter our trade at the golden zone. So basically, this is a secret that we teach inside of our mentorship program, but let me share it with you. Basically, basically you can enter on the golden zone, which is 60, 70 and 80% retracement levels. By the way, this is the settings for my FIB levels as well. What I would recommend for the beginner traders is to divide your trades. For example, you're risking 1%, so you have to risk 0.3% on on each of three levels, on the 60%, on the 70%, and on the 80%. And the stop loss is going to go above this Asian high. Basically, with this way, you can aim for 5R, but sometimes the price can give like 10R trades as well. Let's cover a couple of more examples. Here's another example, and it is a little bit more interesting than the previous one. Let's draw the high and the low of the price action. Let's mark up our Asian range. First, as you can see over here, the price is breaking to the upside. We are getting the confirmed the breakout. But the most interesting part is that we are doing that before the London session. And by the way, this vertical green stripe represents the first 2 hours of the London session, and this pink stripe represents the first 2 hours of the New York session. So basically the price is just doing some manipulation above the Asian high before the London session. And during the London session, the price is just ranging inside of the Asian range, and right before the New York session, we are breaking to the downside, and then price is going to retest our Asian range. Basically, what we do here is we draw our FIB levels from this high, from the sweep, from the high of the sweep to the bottom of the breakout, and then we are placing our trade at the 60% retracement level, and the stop loss for the 60% entry is going to go above 80%. And as you can see over here, the same, like with this trade, we can aim for 5R as well, and the 5R, the price gave us 5R only the next day. So basically the lesson that you need to take from this trade is that you don't take the trades that happen before the London session. So everything that happens after the London session is valid. And when you will be trading, when you will be drawing your FIB levels, you have to do it not from the high of the Asian range, but from the high of the sweep that happened prior to the real breakout. So let's move further and just cover a couple of more examples. So here is our Asian range. This is Asian low. This is our Asian high. And as you can see over here, the price is breaking out to the upside during the London session, and it is retesting our Asian range during the New York session. For those who tell like I'm from US, I cannot trade this strategy. No, you can. We do have trades during the New York session as well. And by the way, guys, this is just one of the 4 methods that we trade. We do have OP method number 2, 3, 4. This one is called OP method number 1. So basically what we do, we draw our FIB levels from the bottom to the upside, and we enter our trade at the 60%, and let's say this was our trade. It gave us 5R, but if you say that the price is almost at the 80%, we could have entered at the 80% as well, and this would have give us 5R trade as well. So doesn't matter. Or you can just divide your trades into 3: one on the 60%, one on the 70%, and one on the 80%, and aim for 5R from the best case scenario trade. Let's cover one more example. This is more unusual example when we do have losses with this strategy as well. For example, what is happening here? The price is sweeping the Asian low, then we're having the breakout to the upside during the London session, and the price is retesting our Asian range during the London session, and we are getting stopped out here from one trade. But guys, we are breaking to the downside. As you can see over here, it is a confirmed breakout. One candle is breaking down, another candle confirming the breakout. So basically we can trade the OP method number 1, the breakout trade, to the downside from here. We have a successful breakout to the downside, the entry at the 60%, the stop loss goes above 80%, and we will be aiming for, in this case, guys, kind of the price didn't give us quite like 5R trade. So this trade, probably this would have ended up being the break-even trade, or like aiming for 4R is pretty good as well. So basically you can aim something around like 3 to 5 hours with this trading strategy. And why this strategy is so mechanical? Because you can trade the OP method number one only one time per one side. For example, we can trade the OP number one to the upside one time, and we can trade OP method number one to the downside one time only and only. So basically, let's say we do have one like bad trade over here. The price broke to the upside. We will not be trading the second breakout. So basically, if you open the charts and if you see that the OP method number one already played out or failed to play it out, that means that you don't have to look at the charts anymore that day, at least for the OP method number one trade. So this is a beauty of OP methods that makes them 100% mechanical. Okay, let's cover this example and we can wrap it up. Okay guys, look, here's our Asian high, this is our Asian low, and over here the price is breaking out. We do have one full body candle that broke to the downside, one more candle closing outside of our Asian range. Basically what we do here is that we draw our fib levels from this high to this low, and we enter our trade. Like, we enter our trade as usual at the 60% retracement level. The stop loss goes above the 80% retracement levels, and we will be aiming for 5 hours. But as I said, sometimes price can give us like 10-hour or like 15-hour trades as well. But this is more kind of like the exclusions. Like, most of the times we are going to get 5-hour trades with this method.
So let me bring it all the way home. I spent years as a spectator watching other traders chasing their big wins, feeling like an imposter, buying every course except the one lesson that was sitting in my own account the whole time. The day I stopped consuming and started reviewing my own trades, everything changed. I fixed how I took profits, I built a simple mechanical plan, and I became the profitable trader I only used to watch. The ARB is a plan, simple, rule-based, one traded session, charts closed by the mid-morning. But I know some of you want me to walk you through these hand-in-hand, the full setup, the sessions indicator, the exact rules, live examples, and how to tailor it to you exactly. That's exactly what I put together in a free training to you. This is the first link in the description. Go watch it and I will see you inside. So stop watching other traders win. Go win.